Welcome back to another episode of me trading smart, managing risk, and learning how to trade effectively. And if I do that, then the millions and millions of dollars will yield as a result. So, in today's episode, it is a Monday. We had a Powell event today, and actually didn't do too bad today. And my understanding of the market is just getting better, literally day by day, because I am putting in the work. I'm showing up to the market every day at 7 o'clock New York Eastern Standard Time, and I'm watching price action from 7 o'clock to around 10, 10:30, 11 o'clock New York Eastern Standard Time. So that's literally 4 hours of watching price action. So building all of this tape reading experience and literally just journaling everything that I learned, it is getting journaled, and I'm putting it down in this device right here. So this is a paper tablet. It's called a Remarkable. So if you're a trader, I definitely recommend getting one. It's a tool that has quite literally changed my life, and I can literally organize my journal in file structure. So it's amazing. So I've been putting the work in, and guys, it's really starting to click. So let's jump right into this. Wait, one more thing. I got to mention my Discord. This is not a plug. All right. I'm not trying to sell you anything. I just want to throw this out there. This is going to be in the intro of every video that I do. So I started a Discord channel. I set my dinner in it tonight. Hell yeah. We steak dinner. All right. So what this essentially is I'm trying to build a community of okay. I'm trying to build a community of a tight knit circle of traders where you can just all come in here and grow together and whatnot, things like that. So if you're interested, the link is in my bio. And if you're joining, please engage and join the community and be a part of the community, and we can grow together. So now, with everything out of the way, sorry about those gifts. Tends to get a bit wild sometimes in there. With everything out of the way, let's get started. All right, top down. Coming to the market today, we have to analyze what occurred last week. Okay? So when you're doing your higher time frame analysis, you simply want to pick out the things that are obvious. And obviously, this is obvious, right? So last week's candle trades up higher into the weekly sell side imbalance, buy side inefficiency, closes below it. What does that indicate? Weakness. Okay. Now this inefficiency right here could potentially be a turning point in the market. And seeing this reaction out of this imbalance right here, close below it, indicates weakness. It is very probable that we trade down into this inefficiency below. Oh, not that. Sorry. Do I have cap locks on? No. Okay. So, coming to the market today, I'm doing my analysis. Studying how we close below this on the weekly chart. We have this inefficiency below the marketplace, so we could potentially reach down to that in this week's trading. And if we drop a fib on this candle, if we get our quadrants, because we treat wicks as inefficiencies, so you would literally treat this wick as if it were a fair value gap, right? So if we drop a quadrant on that, we can see that the high day today forms at the lower quadrant. See that? So what does that indicate? Weakness, okay? Now, the high day was formed in the, I think in the PM, but before that, in the Asia session, it was still wicking off of the lower quadrant of this weekly premium wick. So that indicates weakness. So if this intel right here, closing below this, grading this wick right here, dropping quadrants on it, this is a sign of weakness. So I'm coming in today thinking lower prices, especially with this inefficiency below the marketplace, we could potentially reach down into that. So really, this is the weekly objective here. And we have this weekly low and potentially even this weekly low that we could trade into. So dropping down into the daily, I already have everything kind of already drawn out right now. But here is that wick on the weekly chart. Let me clean this up a bit, okay? Now on the daily chart, we also have another sell side imbalance, buy side inefficiency, and I'm just going to remove this to make it cleaner. But notice how we trade up into this. We fail to reach consequent encroachment, and we close below. So what does that indicate? Weakness, okay? So there's another element supporting the bearish narrative coming into this week. Now look at Friday's range. What does it do? We open here, we trade up higher into this wick, okay? So let's grade this wick. But let me get this out of the way. So if we drop quadrants on this, look how the lower quadrant of this wick is respected as well. Okay. So you're just annotating all the things that make sense. So that marks literally Friday's high. If we zoom in on that, look at that. We drop our fib on this wick right here, this premium wick. Look how we trade up into the lower quadrant. So this is why you want to use wicks in your analysis, because they give you intel that retail is just not going to see. All right. Now this is also an order block. I believe it's an order block. Don't quote me on that. But I believe it's an order block because it's the last up close candle that reaches into this premium array, which was last week's objective. And Friday's range displaces over the open price to that. So we have an order block here. And notice how today's range, we open here, we dig up into that last up close candle, right? And here's the mean threshold of the order block. So when we have an order block, you don't want to see mean threshold traded to. And if it does trade to mean threshold, then you want to see it repel price immediately, just like that. But ideally, in a perfect world, you don't even want to see mean threshold traded to. So I am not anticipating price to trade to Friday's high because that rests above mean threshold of the order block. Therefore, I want to see price stay below it, and I want to see us work towards the previous day low, which we already did coming into today's morning session. And for the downside, I'm thinking down here, we have these very clean lows down here. We have that weekly inefficiency that lines up with these clean relative equal lows on a daily chart. So that's an objective. And then we have these lows down here. These lows are suspect. They are suspect, and they're not going to stay there. They're not going to stay clean. So we're not going to try to pick a top, right? But all the information that we're seeing here could indicate that we may have a turning point in the market. But if we're still bullish, what we could do is trade lower, clean these lows, and then trade higher, right? Or we could just start trading higher from here and just run this high, clear this highs, and then just run to the all-time high. We don't know. You have no idea. You anticipate something to happen, but that doesn't mean that it has to happen. You don't force your will on price. You have an expectation of what you think is going to occur, and then you just read the information and read the technicals and determine if that is likely to play out. Which in this case, I believe that it is likely that we could trade down here. So that's what I'm thinking for the week. So daily time frame, bearish, weekly time frame, bearish, and the nearest term. So carrying that bias down to the lower time frame. If I am bearish on the day, then initially I want to see a rally higher, right? You want to see that Judas swing. You anticipate the Judas swing, the fake move of the day that manipulates retail sentiment, gets them thinking it's going one way, when really the real move is in the opposite direction. Now today we had the Powell event at 155. So you can see that we had manual intervention, which means like the hand is in there. The algorithm is not operating. It's not delivering price at this point in time. There's literally a hand in there controlling what price is doing. It's manual intervention. You can see it's just wild fluctuations, wild price swings. And that's not something that I want to trade. So I want to get a trade on early in the morning session before they start getting in here and messing with it. I don't want to be involved in that. That's when conditions can be a bit wild, and that's when you can get seriously hurt if you're offside. So I don't want to be involved in any of that. I'm looking to get on side with something in the morning session. All right. So if I'm bearish on the day, initially I want to see a Judas swing higher, clear out the buy side liquidity, and then trade lower. Now, we did leave this high and this high intact, right? And this traded up to it as well. So that tells me that they could potentially use this maybe in tomorrow's session, maybe in the following session. We could use this liquidity right here. We could probably tap into the 4-hour order block, and then maybe we could explore lower down here, that sell side liquidity on the daily chart, right? So that's just what I'm thinking. That doesn't have to happen. Like I said earlier, you anticipate something to happen. That doesn't mean that it has to happen, okay? Now, on my first trade of the day, I see this original consolidation right here. So, and then we drop down initially, right? So how I'm reading this right here is this is potentially the start of a market maker buy model, which it was. We have this range, and we initially drop down, drop lower, take out the sell side liquidity. Now, if you read the order flow at this time too, we can see that we're respecting the order block on the 15-minute time frame. We have this inefficiency right here. We trade up into that. We respect it. Notice how no bodies close above or inside of this inefficiency. Okay, so that indicates weakness. And then we have this large down close candle, a change in the state of delivery. So somewhere in here at this point in time, I was anticipating a draw to this low because if you notice, all of these lows come just shy of this low, but they turn away. So what does that do? That is priming that low. I've explained this in other videos. If we come just shy of an area of liquidity, but we turn away, that is priming that low, and that is engineering more sell side liquidity. That just makes it more likely that it's going to get ran at a future point in time. because anybody who's long off this low, when we come just shy of it and turn away, they get a sympathetic sigh of relief because they were about to get stopped out, but it stopped and then turned. And retail also sees this area as just a strong area of support, right? And they're getting long out of this general area. Maybe they see it as a demand zone or something. Who knows? So that is just engineering more sell side liquidity. And the more concurrent runs that you see, like kind of come down here and just turn away, but we don't take that, that makes it more likely that it's going to get taken in a previous session. So we don't take this in the London session, we take it in the pre-market session, which starts at 7 o'clock New York Eastern Standard Time. And that is when we take the sell side liquidity below this low. So I saw this, the London low, right? Primed it, and reading the order flow here, we trade up into the order block, the inefficiency right here, how we're respecting the order block in the daily time frame, how we wicked off of, look how the body's closed below. This is the lower quadrant of that wick on the weekly chart. It's this level right here. And look how we respect it in the Asia session, which is where? Right here, right? Body's closing below it. So that, what does that indicate? Weakness. And you notice from there, the order flow is clearly heavy. It's clearly bearish. Large inefficiency here, trades up into the order block here, trades up into the daily order block, respects it, respects these inefficiencies. Change in the state delivery here, respects that order block, and then we roll over. Large down close candle at 7 o'clock. And we're about to drop down to the lower time frame, explain that, but I got somewhere short in here, actually took a stop out on that, so let's go over that right now. Okay, let's put the executions on. Now, using this information for the macro right here, I know that price is drawing for that old low. How? Because look what we see. We have a consolidation range. We have accumulation. We have a perfect little box of price action. And what do we do during the macro? Look how we have these large down close candles that start reaching for sell side liquidity. So notice how during the macro, we don't reach up for this high here. What do? We see large down range candles reaching for these lows. So during the macro, you can read that information and know that the algorithm is tipping its hand to you, telling you, hey, I want to reach for sell side liquidity. And then you simply look on the 15-minute time frame, zoom out, and think, okay, where could we potentially trade down to? What could be the terminus of this price run? Because if you notice, even on the lower time frame, this is the start of a market maker buy model. If you look at it this way, right? Here's the original consolidation. Drop down, taking the sell side first, smart money reversal. Once we deliver to that old low, this is the terminus of the price run. Once we deliver to that old low, then we see literally the exact opposite of what occurred here. So I learned a huge lesson today about market maker models and the information that the macro gives you, because you can literally study what price action does during the macro, and that tells you what it's going to do, literally. So if you notice here, we have this accumulation range, right? Trade sideways, up, down, up, down, up, down. Okay. What is it reaching for? Well, clearly, look at this large down range candle. It's clearly reaching for the sell side liquidity. Now, if we go to here during this macro, what do we see? The same exact thing, except we reach a terminus. We're trading underneath that old low. And now what are we seeing? Initially, we see accumulation of longs. We trade sideways. We spend time underneath this low. That indicates accumulation of longs. And then during the macro, we start to see large up close candles spooling for buy side liquidity. So what does this indicate? The start of a market maker sell model. If you notice, we come back later and we take that low, right? And then the same thing happens during the 950 to 1010 macro. The same exact thing. We deliver, if I go out to the 15-minute time frame, we deliver to the London high. We also have an SMT, so that's added confluence there. I think that's fine. Drop back down to the 1. What do we see during the macro? This same exact thing. How we spend time accumulating shorts above that old high, accumulating short positions. Smart money is selling to those buy stops above this old high. We spend time up there, And then the same thing, large down close candles during the macro reaching for sell side liquidity. So if you study what price does during these macros, it literally tells you what it's going to reach for next. And that's something that I've discovered recently just watching price action live. Use the information that the algorithm gives you during the macro to tell you what does it want to reach for. Okay. Now, obviously, I stopped out here and this was a losing trade. And that was because I was trying to sell to the buy stops above this short-term high, which was also a 15-minute imbalance. So if I go to the 15-minute time frame, where am I? Oh, I'm all the way over there. Okay. So I was trying to sell to the buy stops above this short-term high that we saw in the 1-minute time frame. I was anticipating the market to draw lower into the new day opening gaps below, but given that the information that we saw underneath this low during the macro, it didn't make sense. So that's how I learned this lesson, right? Because seeing the market spend time underneath this low, dives into that pool of liquidity, spends time underneath this low, and then large uprange candles reaching for what? Buy side liquidity during what? The macro. That tells you that this is the end of the price run because we spent time underneath this low, and then boom, large up close candles during the macro. So it literally tells you what it's going to reach for next. And it also tells you the start of a market maker model, whether it tells you when it's going to transition from the buy side of the curve to the sell side of the curve. Like obviously here, we see the same thing, just inverse, right? Accumulation or perfect little box of price action or consolidation, whatever you want to call it. We drop down, large down close candles. Okay, it's reaching for sell side. Now we deliver to a terminus, that old low. We spend time underneath it. The same thing that's going on up here. And then large up close candles indicates that the sell side of the curve is over. Now we're switching to the buy side of the curve. Now we're reaching for buy side liquidity. The macro, what happens during the macro tells you what it's reaching for. And that's just a crazy lesson I learned recently. And this trade I'm not really proud of. I was reading how we were reacting off of this fair value gap right here. I'm just going to, no, I'll keep that on. Okay. So here we have a 1 minute fair value gap. Now I was reading the reaction off of this, how we're respecting the upper quadrant, although we are spending time in it, which is not what you want to see. You want to see it just dip its toe into there and immediately move away from it. We spent time in it. We had a run on short-term sell-side liquidity and then changing the state delivery. So I was watching this down close candle. I wanted to get long off of this down close candle. I hesitated. Now, these two candles form a volume imbalance, and I bought on a downtick into the volume imbalance right here, although this candle was actually ended up being an indecisive candle in the moment I was watching it close, and it ended up closing as an indecisive candle, but I still bought on a downtick into it, and that still kind of supported price. And the same logic that I used earlier, notice how we came short of this high, right? But we turned away from it. What does that do? That primes that high. That just engineers more buy-side liquidity. We turn away from it here, so I'm thinking, I know that high is going to get ran out, especially using the information that I see during the macro, right? It's aggressively spooling for buy-side liquidity now. Now we're on the buy side of the curve, and a terminus for this price run would be the London high. You could target this original consolidation, this consolidation here. So on the way down, we are just engineering sell-side liquidity on the, not sell-side, buy-side liquidity on the entire way down. But if you use the information given during the macro, you know exactly what it's reaching for. And that's a cool lesson that I've really just learned from watching price action recently. So I think the best way to learn, the best way that you can learn is absolutely just watching price action live. And so I put 2 contracts on in this trade. I couldn't figure out how to take partials. So I sold short on a market, 1 contract here at this high, and I was going to target the new day opening gap above. But obviously we ran that high, had a deeper retracement, came back, stopped me out from break even here. And then we drove up into the new day opening gap high. So another characteristic that I've learned about the daily range from simply just watching price action live is that from in the pre-market session from 7 o'clock to 9:30, we usually have a run in one direction, and then 9:30, the move after 9:30 tends to run against that. And you kind of have to spot like what kind of model are we in? Are we in a buy model or a sell model? In this case, we were in a buy model. Obviously, here we have the original consolidation. Now, it's not going to be valid to fade this move until it delivers to a terminus. And that terminus is simply some higher time frame point of interest or a very key pool of liquidity, in this case, liquidity above the London high. So it's not valid to look to sell short on this entire price leg until we deliver to a terminus, which is the London high. And that is when we drop down to the lower time frame and we can see accumulation above that high. It's spending time above that high. And this is literally my bread and butter entry model right here. And we have a smart money reversal during the macro. Accumulation, accumulating short positions during the macro. Large down close candles during the macro. This candle opens, trades up into the inversion fair value gap here, the order block, and this fair value gap here during the macro. You see what I'm getting at? I've just recently opened my eyes up with macros, and a lot of things are starting to click once I started studying how does price behave during the macro. Because this repeated literally throughout the entire session. And if we notice during this macro, what do we do? It's the same thing, right? Initially, we trade sideways. So it's kind of like your original consolidation for the start of a market maker model. And then what do we see? Large up close candles reaching for what? Buy side liquidity. Okay, so we're starting the buy side of the curve in a market maker sell model. And then later on in the session, we come back, clean out these equal lows, right? So it's kind of the same thing, literally repeating itself over and over and over again. Now I'm going to be watching for this in the following session and just literally every day, because I think if you literally just study what is this thing reaching for during the macro, you can have a really good grasp on what the current draw on liquidity is, right? You probably don't even need a bias just using this information. But what do I know? I'm just a beginner. So don't quote me on that. I just like explaining what I saw in today's session and what I learned throughout my live trading experience, because if I try to teach it to somebody else, or if I try to explain it, then that helps me learn it better. So that's why I love making these videos, and that's why I do this. But I haven't even gone over my third execution today, which is simply, now at this point in time, I noticed that we had a small opening range gap. So if you see previous day settlement and the opening range gap low, it was less than like 40 handles. So that is your first signal that this morning session could be quite sloppy. We also have that Powell event later in the afternoon. So that's another reason why this morning's price action could have been sloppy. So I was cautious approaching today's session. And when I saw a spending time inside of this imbalance, you don't want to see that at all. That is another indication of high resistance liquidity conditions or a sideways market. So I wanted to see clear indication that a smart money reversal has occurred. I was not willing to sell short up in here because I just wanted to wait for more intel, which is another lesson in itself. You don't need the highest high or the highest low. You can spot the reversal and then trade the continuation, which is exactly what I did here. Here I had my entry model, right? Everything that I needed to see. We have 3 drives, right? Notice how each time we take out a short-term high, there's a lack of displacement. What does that indicate? Accumulation of short positions above that London high. And then large down close candle, we have a market structure shift during the macro, inversion fair value gap, order block, boom. Here's the algorithmic signature, how we open here, trade up into the inversion fair value gap and the fair value gap, but we close below it. That's the algorithmic signature of weakness, of heaviness. And then I notice how we're just constantly putting in lower lows and lower highs on these candles right here. So now it's very clear to me that this thing is heavy and it's in the sell program, and we could reach for the sell side liquidity below these extremely clean lows. All right, I lost my train of thought again because my dog is barking. Sorry about that. But anyways, what I was saying was spot the reversal, trade the continuation. Now, this is very clear to me that we have a smart money reversal accumulating above the old high, the London highs, large down close candles during the macro. So I'm simply looking to get in sync with what is in motion, knowing that the market is drawing down to all the sell stops below these lows. So I wait for an order block to form, and then I simply trade on the uptick into the order block. And it's easy. And low threshold objective, because I'm learning, I'm new, I'm a beginner. I don't need to go for anything extreme, anything extra. And I'm just targeting these relative equal lows right here. Boom, it hits. So it was like over 30 handles in 5 minutes. So there you go. Spot the reversal, trade the continuation, study the macros, know what model you're in, top-down analysis, higher time frame to lower time frame. I think I covered it all. I think I did cover it all, starting from the lower time frame, not the lower, higher time frame, all the way down to the lower. Hopefully everything made sense today, and I think that's going to be it for this one. All right, see ya.